Hey guys, welcome back to another episode of US Stock Market Technical Analysis. In this video, we'll be taking a look at the S&P 500, the Dow Jones and the Nasdaq for the month of March. And if you are new to this channel, in this video, I'll be taking a look at the S&P 500 first, followed by the Dow Jones and the Nasdaq. Okay, we'll begin with the S&P 500 first. In my previous US stock market technical analysis video, I talked a bit about the decline in prices for the US stock market, such as the S&P 500. Over on this chart over here for the S&P 500, we see that the decline was at this part over here. And if we were to see the percentage decline in prices for the S&P 500, we take it at the peak over here and to the trough over here. So the trough was around here. Prices for the S&P 500 fell by about 5.78%. And in one of my most recent videos, I share why I believe that this decline in the prices for the S&P 500 was not a market crash, but rather a market correction. And you can check out that video over here. But to summarize in this video, the reason why I believe as the S&P 500 continued to decline about a week ago, I mentioned that at that time, I believe that the decline in prices for the S&P 500 was just a correction and not a market crash. And one of the main reasons is because the percentage decline is still less than 10%. As you can see on the chart over here, from the peak to the trough, the decline in prices for the S&P 500 is only 5.78%. And it's not even 10% yet. In that video, even while others might be saying that this was a possible stock market crash, I still believe that it's just a normal market correction. And I have mentioned this many times in my channel if you have been following me for a while. When the market is on an uptrend, which the S&P 500 is, even though the overall direction is still upwards, prices do not move up in a straight line. Rather, it follows a wave-like motion. So the upwards movement during an uptrend is called a rally. And then when prices decline, we say that there's a retracement or a correction. So I believe that the decline in prices for the S&P 500 in the past week or so was more a correction rather than a stock market crash. And you can see that since then, prices have recovered quite a fair bit from here to here. Okay, now let's go on to the 1 hour time frame. We'll zoom out a bit over here. We're at this decline here where prices fell by quite a fair bit. And then prices managed to find support at this area over here. And then from here, this was a pivot point where prices reversed from a downtrend over at the left side of the chart to an uptrend in the right side of the chart. How do we see that for prices on the right side of the chart? Prices are on an uptrend. One way to see for the S&P 500 is that the prices are making higher lows and higher highs. So we circle all the lows on the right side of the chart. So this was the first low over here, another low over here, another low over here, and then another low over here. If we compare all the lows over here, this low was higher than this low was higher than this low, and then this low was higher than this low. We see that prices are making higher lows. The next thing that we want to look out for are the highs in the price chart. This was one high, this was another high over here, and finally this high over here. Similarly, if we were to compare the highs, this high was higher than this high over here, this high was higher than this high over here, and finally this high was higher than this high over here. We see that at the right side of the chart, not only are prices making higher lows, but prices are also making higher highs for the S&P 500. When that happens, we say that prices are on a uptrend. By looking at prices this way, we see that for the S&P 500 on the hourly time frame, prices are on a very clear uptrend right now. With that said, I believe that the line of least resistance for the S&P 500 moving forward is upward. And a quick pointer to take note over here is that technical analysis gives us a higher probability of where prices are likely to head to. And to put it into context, for this case for the S&P 500, I believe that there's a higher probability that the S&P 500 will move forward in the coming days. However, that does not mean that the S&P 500 will definitely rise up. So if I'm wrong and the S&P 500 do not rise up, but instead it falls, then the next level of support that I'll be taking a look at is this support level over here at around $389 and $388. That's my technical analysis for the S&P 500. Now, let's take a look at the Dow Jones. So we'll go on to the daily time frame and we'll clear this one over here and we'll clear the technicals. Okay, so let's zoom in over here and see. For the Dow Jones, the decline in prices wasn't as severe as the S&P 500 and the Nasdaq. And the reason is this, because the Dow Jones comprises of a greater percentage of stocks which are value stocks. And one of the reasons why there was a decline in the S&P 500 and the Nasdaq was because of the rotation from growth stock to value stocks. And the Dow Jones happened to comprise of a greater percentage of stocks which are value stocks. And that is why we see for the Dow Jones, the price decline was less severe as compared to the S&P 500 and the Nasdaq. And if you take a look, in fact, after this short and small decline, prices for the Dow Jones managed to shoot back up, forming all-time highs at this price level of around $327.79. If you ask me right now, the rise in price for the Dow Jones is a bit too fast and too steep, as seen over here where prices rise almost parabolically. So in the short term, I believe prices for the Dow Jones is a bit overextended and overbought. And when prices are a bit overbought and overextended, prices tend to do two things. The first thing is that after prices are overbought and overextended, prices tend to move sideways for a while. And as prices move sideways for a while, it allows the Dow Jones some time to digest the steep rise in prices before. The second thing that prices tend to do when it is overbought and overextended is that prices can decline a bit from there. So these are the two things that prices tend to do when prices are overbought and overextended. And again, we are talking about higher probabilities. I'm saying that prices have a higher probability of doing these two things. Can prices continue to rise even if it's overbought and overextended? Definitely. But the probability of prices doing that is lower, right? So for investing and trading, it's not about predicting with 100% certainty where prices are going to hit to. All we are dealing with is probabilities. And in order for us to be successful in the stock market, we just need to tilt the probabilities in our favor. Okay, now let's take a look at the 1 hour time frame. We bring on the technicals. Over here, we see prices declining for a bit, and then prices managed to find support at this area over here. And then since then, it has been moving up. We had a steep rise over here. And then, like I mentioned earlier on, when prices rise steeply, prices tend to do either one of these two things. Either they move sideways for a while, or it declines a bit. So in this example over here, after prices rose very fast, prices move sideways for a while. You can see that prices move here sideways for a while before it continued to move up. And again, right now, prices are a bit overextended and overbought. Moving forward, I see the Dow Jones moving sideways for a while. Or if it declines, then it declines a bit over here to a price level of around $326. And if prices continue to decline, then I see the next level of support to be around at this price level of around $324. So that's my technical analysis for the Dow Jones moving forward. The next one that we'll be taking a look at is the Nasdaq. So we'll go on to the Nasdaq, the daily time frame, clear this, and we'll clear the technicals. Okay, so this is the price chart for the Nasdaq, and among the 3 US indexes, the Nasdaq has been the worst performing. From the Nasdaq peak in 16 February 2021 over here to all the way over here, we see that the Nasdaq has fell by about 12%, right? So compared with the other US indexes such as the S&P 500 and the Dow Jones, the Nasdaq has declined the most in percentage terms. It's because of the rotation out of growth stocks to value stocks. And since the Nasdaq comprises of a greater percentage of growth stocks compared to value stocks, there's a greater outflow of funds from the Nasdaq. And that is why we see that the Nasdaq has declined the most in percentage terms. But you can see that for last week, the Nasdaq managed to recover a bit. And if we just zoom in a bit over here, there are some reasons to be bullish about the recovery in the Nasdaq. One of the reasons to be bullish is that the Nasdaq has managed to find support at this price level of around $300. Over at this price level of $300, prices managed to find support one time over here, another time over here, and then finally the third time over here. And you can see that after prices managed to find support over at this area over here, prices managed to go to the upside. And even though prices fell a bit from Thursday to Friday, Friday's prices still managed to close above this area of support at around $314. Okay, let's go on to the 1 hour time frame to have a greater picture of what's going on with prices for the Nasdaq. Okay, so over at this area was the support level that we talked about earlier on in the daily time frame. So this support is a very strong support level because prices have tested that price level 3 times and prices did not manage to break below that price level. And another point to take note for that support level at $300 is that round numbers tends to be good psychological level of support. So what do I mean by round numbers? So round numbers can be around $290, $280, $300, $310, and so on and so forth. So for this example, at the $300 level, $300 is a round number. And we can see that at this price level, it is also proving to be a good psychological level of support. Those are some things to pay attention to the support level at $300. And then after prices managed to find support, prices moved to the upside. And then this was on Thursday. And then on Friday, prices gapped down. Even though prices gapped down on last Friday's opening price, a positive note is that prices managed to still find support over at this area over here and close above the support level. So if you have been following me for a while now, whenever prices break above a resistance, I like to see prices falling back to the area of support and then moving up from there. So can you see how this setup is very ideal? Over here, we see prices breaking above the resistance, and then after that, prices decline, but prices still manage to find support at this support level over here. For Monday's trading session, there's a high probability that the Nasdaq will continue to move to the upside. And if the Nasdaq continues to move upwards, then the next area of resistance that I'll be taking a look at for the Nasdaq is this price level of around $325. At this price level of $325, there's an area of resistance. If you take a look at the left side of the chart, this was the first resistance over here, and this was the second test of the resistance over here. And both times when prices reached the resistance, prices fell down. And then over here, prices reached up again, and then it fell downwards. So for the Nasdaq to continue to move upwards, this is the next area of resistance that it has to break past. But if the sell-off continue for the Nasdaq, and if the Nasdaq break below this support level, then the next level of support that I'll be taking a look at is this price level over here. So the price level of around $309. And if moving forward, the Nasdaq continues to fall, then the next important area of support that I'll be taking a look at is this price level over here that we have mentioned earlier on. So the price level of around $300. That's my technical analysis for the Nasdaq. Hopefully you guys have learned something from this US stock market technical analysis video. If you did, smash that like button because it will really help the channel grow and allow me to produce more content such as this. And if you are new to this channel and haven't already subscribed to this channel, make sure you subscribe to this channel because each week I release new videos about investing, trading, and the stock market. I'll see you in those other videos to your financial success.